Joining us today are Feroze Azeez of Anand Rathi Wealth. Feroze, what stood out for you in the budget from a personal tax perspective? We did see securities transaction tax on F&O getting hiked. Do you think that would impact arbitrage funds and ultimately the returns for an investor there?
Yes, Sonal. First, let me touch upon the direct tax. I think one thing, if you're a viewer and if you're watching, if you're in the old tax regime, it is apparent to naked eye that you should not swim against the tide. There are about 74%, 73% of them have now moved to the new tax regime. If you are a part of the 26%, I think this budget is the last nail in the coffin for the old tax regime. And you should try and move to the new one at ASAP and not get into these small deductions because there was no tampering there. And the new tax regime is so lucrative that you shouldn't miss it out. That's point one. Point two, when it comes to STT, I think there are large implications, different kinds of implication of the STT. One is there's a key message. That's not just an STT change. If you read the para in the proposed bill, you will see it as we are trying to discourage the futures and options trading platform and the higher volumes which are there. It's not just about tax collection. How much tax do we collect in STD? 48,000 crores, if I'm not wrong. That will not materially change because of this tax change. It is a message that we don't want trading mindset capital market like the US. We want a more investor-friendly market than a trader-friendly market. That's why you see the traders are spoofed and they want to quit today and bring down Nifty by about 600 points. So it is investor-friendly, trader-unfriendly. That's one message. The second thing, if you see the nuance or the fine print, says that interest expense will not be allowed to set off against the dividend if you have borrowed to invest in the market. Again, leveraged market positions are also discouraged. So that's where I would like to stop. But there are larger implications to the futures and options on the derivative side. Since I manage a derivative treasury for a couple of decades, I probably touch upon a little greater detail at that point.
Feroze, you wanted to touch upon the derivatives bit. Also wanted to understand some of the exemptions or the TCS rate cuts which have come by on LRS payments that are made. I just wanted to understand how are some of these factors going to affect your personal finances. You did mention it's time to move to new tax regime. Anything else that you think was a big takeaway from the budget this time?
Yes, so let's see. First, let me touch upon that 15H and 15G submission to depositories is, of course, something which is very good. But I was surprised when I read the fine print that it's applicable from financial year 27-28 and not the one which is coming by. So that's one thing which you should keep a note of. The relief to small shareholders and senior citizens with that form submitting to depositories is not applicable for the subsequent financial year, but 1 year later. That was surprising. That's one thing I thought fine print should be highlighted. Coming to the question of, from a personal tax standpoint, what stands out is certainly the fact that the buyback tax, I personally think it is beyond the point which I'm going to make is a nuanced point and not visible to naked eye. It is not about tax coming down for a retail shareholder alone. If the tax comes down from dividend tax, which was a flat rate, to 12.5% in the hands of the tax owner, there are two things which happen. One is the frequency with which buybacks were happening had become near zero. Now, when buybacks happen in the market, there's a kind of a market buoyancy which happens. Now, for example, if I'm a listed company, if I'm making profits like if my company's profits projected are 375 crores for this year, and if with God's grace, if I'm able to meet that guidance, the first question which the board will ask is how much to be paid back and by what form. If it is dividend, it does not impact market prices, but if it is buyback, it creates a buoyancy to the price that company is extinguishing their shares by buying it back, increasing the promoter stake if it does not participate. So it is a great positive, buoyant sentiment for the NSE small cap 250 companies, especially because today the balance sheets are reasonably large. The reserves are too many. And that's why I think is the most important impact. Not the tax, but the frequency of buybacks, creating market liquidity for an FII, for a retail guy, tax efficiently.
Got it. Take that point. I have a lot more questions. We are completely out of time, so we'll take this forward some other day, I would say tomorrow, because we have a working day, a Monday tomorrow. But thank you so much for your initial thoughts, Feroze.